Yesterday we covered up to this place and regulations, little bit of regulations here. The corporate governance direction of 11/2007 is very strict. It needs to, it clarifies the responsibilities of the shareholders and board of directors and the management of banks and finance companies. I think it applies to money brokers as well. Then, then customer charter direction of number 8, 2011 should be drafted by each and every financial institution, explaining how they would serve the community. When I say community, it is all stakeholders, the customers, the suppliers, the staff, including the benevolence of disabled customers, the clergy, elderly, and also the illiterate people who cannot read or write. So the customer charter direction is very clearly drafted. It says that whatever the products and services on offer has to be of service to the customers, and that amount of service that will be given to the customer has to be very explicit, and such explanations can be described in leaflets or by way of notices in the lobbies, and also on the websites. Little bit further is that on the customer charter direction, it specifies where if any customer is dissatisfied with anything, any transaction, any information, they should be in a position to contact a complaint resolution officer of the financial institutions concerned and seek a solution. And if by any chance the solution provided by the complaint resolution officer is not acceptable to the customer or the victim, then he should be given the contacts and the contact details and the name and the addresses of the financial ombudsman. Financial ombudsman is always a retired judge or a retired senior banker who would run a mini court. And in that place, when the customer makes the complaint, the financial ombudsman sends summons to the customer and the bank concerned, including the officers responsible, to appear before him and give evidence. And he will make a judgment and propose a solution. Mostly the financial ombudsman decisions have gone in favor of the customer so far, about 80%. So therefore, customers having received the solution for their grievance, they are happy. But financial ombudsman is maintained by a contribution by all the bankers and the central bank. So customer charter One of the significant provision is that when a customer interacts with a bank or finance company, they should be shown the current progress in the accounts, account balances, or any money is due to the customer in writing on a periodical basis. Example, on savings accounts, the passbook or an e-statement. Current accounts, a printed statement or an e-statement. And on FDs, with each transaction, there should be a confirmation of placement of FD certificate or renewal at notices or advices. So such transparency is requested by the Customer Charter Direction of number 8 of 2011. Related party. Now, any shareholder, board of directors, or senior management and their family members and friends who would wish to avail the services or buy the products of the financial institution, they should be treated equally as any other customer. Not a single cent favoration should be given to them. When they apply for a loan, the rate of interest charged should be the same as in the case of other customers. And when they give a deposit to the financial institution, the interest paid should be the same rate as in the case of other customers. There shouldn't be any preferential rates or services given to any related party. Then maximum amount of accommodation, this direction number 7 of 2007 is very important because the board shareholders and board of directors, particularly the major shareholders, would demand more facilities from the financial institution, which is said to be serving your own man. Basically, the deposits taken or deposit attracted or deposit mobilized are savings of the public. The public resources savings, after having collected, the financial institutions cannot serve their own companies or own shareholders or sister companies or same group people. It is prohibited. So therefore, there are 2-3 regulations under maximum amount of accommodation. Basically, maximum of 30% of the share capital, maximum of the 30% share capital only can be lent to a single person or a affiliated group of companies. And there are other few complicated regulations we need not discuss here, but these are very strict regulations. Then the classifications of loans and advances, direction number 3 of 2008. I think we discussed that in a previous discussion, that after the default of 2 installments, or after the default of first installment, basically monthly installments, after 30 days, if the installment is not paid, when it is in arrears and then it is not settled until the next month, basically 59 days or 60 days, should be categorized as special mention category. Then overdue, past due, and non-performing loans. There are specific time schedules for the classification of loans and advances. Now, when the loans and advances are inactive or when they are regularly settled without any default, they are in active category. Then after 59 days of the first default of installment, it is going to special mention category. Then overdue, past due after each and every month. And I think after 5 or 6 months, it should be categorized as non-performing advance. And this NPA, non-performing advance ratio, industry ratio is in the region of 3 or 4% of the total loan portfolio. Higher the non-performing advance ratio is going to show bad management of funds, bad loan portfolio managed by the financial institution. So that is going to be one of the significant measure of success of a financial institution. And new depositors may look at such indicators of management before placing their funds. So therefore, when there are more classified loans and advances on bad categories, the reputation of the institution is going bad to us. And integrated risk management framework, direction number 7 of 2011, all risk aspects, market risk, credit risk, operation risk, liquidity risk, and then all risk aspects should be measured, should be identified and measured, and then managed in an integrated manner. Integrated risk management policy and the framework should be enforced. So the board risk committee meeting, ALCO, and the main board meeting, all these risks should be briefed in a integrated manner, and there should be proposals to manage such risks. Okay, the instruments available: basic banking products and instruments, investment instruments, derivative products and instruments, hybrids. We are going to discuss some individual instruments, including derivatives instruments, in the next slide presentation. But as we discussed yesterday as well, there are only a little number of products available in Colombo or Sri Lanka market. The education awareness created by programs like this should pave the way for creation of more financial instruments so that the financial market develops. Financial market is a mechanism that allows people to easily buy and sell financial securities, commodities, and other fungible items of value at low transaction costs and at prices that reflect the efficient market hypothesis. With two things to learn here. What is fungible? Fungible is that when you buy a treasury bill and then when there's capital gain, you sell, and then you are able to replace it again by buying another treasury bill. So it's basically fungible means replacement, replacing one investment with another. Then the most important concept of efficient market hypothesis, EMH. There's a couple of more slides to explain that, but it is like market hypothesis that is being studied at various degree programs, master's programs, and PhDs. But it helps us to understand how the markets behave. Efficient market hypothesis. EMH is a hypothesis in financial economics that states asset prices reflect all available information. Asset prices reflect all available information. For example, the stock market, a particular company share, the marketplace expect that the price of that company share is reflecting the all available market information about that company performance. Asset prices reflect all available information. Similarly, about treasury bills, treasury bonds, repos, central bank securities, foreign exchange, currency traders, we expect all available information to reflect the prices that they carry. If by any chance, if some information is withheld or not made public, whether it's bad information for the prices or a good information for the prices, it can lead to inside information trading, and then so some individuals taking advantage of that inside information to buy or sell such asset and make undue profits at the expense of large number of innocent market players. A direct implication is that it is impossible to beat the market consistently on a risk-adjusted basis, since market prices should only react to new information. With the first assumption of asset prices reflect all available information, then the demand and supply created by the entire investor base or the client base should react only to new information that is being made available. And anyone acting on inside information, the information which is not available to the general public, is a criminal offense. We know a couple of examples in Sri Lanka as well as overseas. We knew one person from Sri Lanka was trading in New York in the name of Mr. Rajanatnam. He have had inside information and benefited in many ways, and therefore he was jailed in the United States. So therefore, any change in the market prices of any asset should only be as a reaction to new information. A reaction to new information about the particular asset. So what does this hypothesis say? Hypothesis. I hope and I guess you understand the meaning of hypothesis. Hypothesis is a concept or a theory put forward by some think tanks or scientists or researchers, and it, it has to be proved, and it is an opinion of a group of wise thinkers. So therefore, efficient market hypothesis is considered to be helping the market players, buyers and sellers of various instruments, to understand the behavior of prices of assets in the marketplace. Argument against the EMH points out that arguments against the efficient market hypothesis points out that investors value stocks or assets differently. It is true they value the assets differently, and there can be different mindsets and different amounts of demand from different sections of the investors. It is impossible to determine what a stock should be worth under an efficient market. It is the process of price discovery based on the understanding of the new information of that particular asset. People, investors demand such assets or sell, dispose such assets going by the new information that is available in the marketplace. Proponents or people who believe, who support the EMH conclude that investors may profit from investing in a low-cost passive portfolio. With the new information that is coming up, the investors will want to profit from investing in a low-cost passive portfolio when the price of that asset is on the rise. So it is a good scientific way of thinking, efficient market hypothesis. It's particularly the market participants of financial markets for any assets that are being traded, whether it is foreign exchange, whether it is treasury bills, treasury bonds, or any other product. This EMH describes rational thinking of reacting to new information that is as and when they are made available to the market. You can expect one question from the EMH in your examination paper. So the financial markets facilitating various activities. Raising of capital. When you want to raise capital to start up a business or a project or a company, it is the capital market that the investors should approach or should indulge in to raise capital markets. And when they want to transfer risk, always when you identify a risk in your investment, the risk diversification or risk transfer, this activity is possible when they are in the derivatives market. risk transfer is possible in the derivatives market. Then when people engage in international trade, whether it is going to be imports, exports, or remittances outside or remittances inward, it is the currency market that is going to help them to achieve their desires or achieve their goals, to complete their transactions in the international trade. So capital market, derivatives market, and currency markets. So these are the markets that have been organized to cater to the people who want to raise capital through capital markets, people who want to transfer risk through derivatives markets, people who want to settle payments and international trades. It is the currency markets. They are used to match those who want capital or the deficit units to those who have capital or the surplus units. In the basic economics, you may have learned in the O-level or A-level commerce subjects or economics, the entrepreneurs or the manufacturers or the producers need capital or savings. They are called deficit units to produce the goods or services. And the rest of the crowd who have savings, that is income minus expenses, excess income minus or expenses, savings, they are called surplus units. So the surplus units, the savings or excess of income or expenses, they will want to postpone it for a future date for consumption. So therefore they would lend to the deficit units to support their manufacturing of goods and services to help the society, the mankind. At the same time, the surplus units might not know fully the people who want capital or deficit units, so therefore they cannot rely or they cannot trust to deposit or save the money with them directly. Therefore, the intermediary institutions called banks and finance companies has emerged. The banks and finance companies, they are reputed and are always there to accept this excess savings or excess income or expenses from the surplus units. And in turn, these intermediaries, banks and finance companies, lend those savings accepted as deposits to the deficit units or the entrepreneurs or those who produce goods and services. And they in turn repay the loans to the intermediary banks and finance companies, so that the intermediaries can repay the depositors when they wish to withdraw or when they choose to consume their savings deposited with the intermediaries. So these are the markets, financial markets, helping the economy, and we all are part of these financial markets, and you all as money brokers help to manage liquidity mainly with the banks and finance companies and primary dealers who are intermediary institutions licensed by the regulators. Okay, there are a few MCQs. I think this we discussed some time back, but anyway, for the fun of it, we'll go through it again. When are the spot forex transactions due for settlement? The four answers given are on the day of the following the transaction, 2 working days after the transaction, 5 working days after the transaction, 7 days after the transaction. So I think you are capable of answering this. The correct answer is B, 2 working days after the transaction date, spot forex transactions. Which of the following are true in relation to currency dealing? Which of the following are true in currency dealing? Spot for FX rates are quoted as bid offer spreads. That's true. Forward rates are generally quoted as bid offer margins against the spot rate. That's also correct. Forward FX contracts are standardized and tradable. It is not true. It's not correct. All currencies are quoted only against the USD. That's also not true. So the correct answers are 1 and 2. So answer is A. Please shout out if you have a different answer. The following are true of the forex market except. That means you have to choose the wrong answer. Is dominated by the forex dealers of commercial banks. Includes spot deals which must be settled 2 business days after the date of transaction. Foreign exchange brokers link buyers and sellers. Quotes every currency against the US dollar. So D is incorrect. So correct answer is D. I guess you are thinking with me, although I do not hear any voice. For this one, of course, I need to hear your voice. If you were quoted GBP1 equals USD 1.5997 and the offer side 02, and you sold GBP 5 million, you were quoted. That means there is a market price for GBP and you sold to the market 5 million GBP. How many USD you have bought? Can anyone tell me the correct answer? Sorry?
Answer C, sir.
How did you get it? 5 million multiplied by
The bid.
1.5997.
Yes, sir.
Answer is 7,998,500. That's correct, no? Okay. Anybody else? Others got any different answer? No. If you are short dollars in USD CHF, CHF is Swiss franc, right? And you get the following quotes, which is the best for you? You are short in dollars against the CHF. So what is the best for you? A or B or C or D?
Answer D, sir.
Yes, because when you're short, you have to buy as low as possible, isn't it? 1.5300. Answer
Yes,
is
sir.
D. Answer is D, right? Correct. Okay. So that slide presentation is over. And please study a little more about EMH or efficient market hypothesis, because there can be a question on that in your final exam paper. And now we are going to go through another slide presentation which explains financial instruments and products, financial instruments and products on an individual basis, which you can use to manage your risk, investments, and the risk, including some derivative instruments. I We want to discuss these particular features of instruments, financial instruments, and the practical use, thinking that when you study the features, you will be in a position to create new products in the marketplace as time goes, we go on. As long as you come to work in the morning and go in the evening and then do only the dollar rupee and then the T-bill, T-bond, there cannot be any progress. So when we discuss the features and the practical use of financial products practice elsewhere in the world, in the developed markets, and you might be in a position to implement a few of them into our market, the features can be different. I can remember in the late 80s and early 90s when the repurchase agreement was brought into our market. There was a big hue and cry at that time. I was working for BOC at that time. And then we were able to discuss with the central bank, explain to them, and introduce that as a product that we want to use in the market. So finally, the central bank gave their blessings and they authorized the use of repurchase agreements in the marketplace. So likewise, the regulator, especially the Central Bank of Sri Lanka, would be thrilled, would encourage anyone to propose certain new products, new instruments, new processes, new thinking. They would welcome, but you will have to go through a process of presentations and convincing, and then convince to them to convince them to approve such products, and the marketplace will develop. I'm describing this process after having gone through the introductory process of certain products and certain procedures and certain mechanisms, and having explained to the central bank, you have to start with the, the particular department responsible for with the central bank, and then work out the proposal and explanations with the seniors up to the deputy governor. My experiences always had been very the central bankers, because their duty is to regulate and then develop the marketplace, develop the markets. So, in other words, when we propose and bring out the proposals for various mechanisms and the processes and the products, they love it because we are helping them to develop the market. You will not sometimes be not named as the creator of that such product or process or procedure, but you can be happy, really happy, when such products spoken about by you being implemented, your mind get that satisfaction. So therefore, this type of new thinking, new endeavors should be discussed with the colleagues and then brought forward with the central bank and also the institution like Money Brokers Association, Forex Association, Sri Lanka Banks Association, and various forums are there to support such efforts as well. I can remember one of the initiatives taken by us, particularly by me. The Lanka Financial Services Bureau was set up when the SWIFT was in operation in Sri Lanka, when the SWIFT was used to support the RTGS, scriptless security settlement system, and the normal outward remittances, the Indian remittances by the bankers with the foreign countries. SWIFT was used, and then the cost on the SWIFT maintenance for each bank was very high because of the low volumes of marketplace activities in Sri Lanka. The SWIFT cost, installation cost, and the maintenance was comparatively higher than other countries, because other countries you get volumes. So the bankers and the primary dealers and others who use SWIFT, when the higher volumes are there, small margins of with each transaction with the higher volumes, they can support. But in the Sri Lankan context, it was not so. So when I proposed that there should be a common SWIFT gateway in Sri Lanka, supporting all the SWIFT member institutions in the country, and that SWIFT gateway to be recognized by SWIFT as the processor for SWIFT messages which are coming to the banking and the financial institutions and the primary dealers in Sri Lanka, and all the outgoing messages from banks and finance companies and then primary dealers from Sri Lanka going to outside, Sri Lanka. That gateway must be comprehensively planned, and a one-time investment was needed, and thereafter each and every SWIFT member who use banks or primary dealers or finance companies who use SWIFT will reduce the monthly maintenance cost by about 40% of what they were paying. So the proposal was taken up by the central bank. Our proposal was taken up by the central bank, and they studied over it, and we were called upon to make presentations. And it was another gigantic task to convince the CEO forum of banks and finance companies. They too loved it because the cost was going down. Finally, the advantages were that the broadband available to each and every bank was small, and this particular company, the gateway was to have very much bigger superhighway broadband to carry the messages. So therefore, the efficiency and the convenience and the cost saving brought on by this Lanka Finances Bureau to the market helped the RTGS and SSSS, and then also interbank transactions through SWIFT, and then with the rest of the world, was made very efficient. So finally, all the large banks agreed to contribute capital of 10 million each. Medium-sized banks agreed to contribute capital of 5 million each. Small banks and primary dealers and few finance companies agreed to contribute 2 million each. We collected 69 million of capital and formed that company and bought the software and hardware and hired the manpower required and install it. And we spent only 32 million out of 69 million collected. So the balance money, 69 million minus 32 million, we did not want in that company because that might go astray, one thing. Second thing, we we did not want to enhance the value of the company unnecessarily. So the balance money is 69 million minus the 2 million was pro rata paid back to the contributors. So now the company, the SWIFT Gateway, Lanka Finance Bureau is in operation for the last 12 or 13 years. 13 years and serving the entire financial service community. So this type of success stories we can state to encourage the present generation like you all to come out with the proposals that are required to broaden the prospects for the financial markets in Sri Lanka. We will start with a few common financial products, financial instruments and products. These are the list of financial products that are listed here, but some of them may not be necessary because they are retail market, but the features can be learned and used to create new products by going by the features and the mechanism of these products. So we are going to discuss foreign currency and cash, certificates of deposits, traveler checks, credit cards, debit cards, inner remittances, drafts, SWIFT, outer remittances, draft SWIFT, money services, business, MoneyGram, etc., forex, spot and forward contracts. Then few derivative instruments like high yield deposits or dual currency deposits, financial futures contracts, financial options contracts, interest rate swaps, and forward rate agreements. In all, common to all those products, know your customer directions are important because no one would like to get involved with money launderers and terrorist financiers. So there are government gazettes guiding the market practitioners to gather minimum information on anyone coming on board as clients or investors, know your customer data. So those minimum information is available in this particular gazette on the 28th of March 2011, but thereafter there were additions. The best way is to look for the KYC information that is sought by bankers and finance companies along with their account opening forms. So we are going to discuss few of them here, but still, if anyone wishes to have the full set of information, this is the way. Then another important guideline is that on third-party deposits or somebody depositing money on to a third-party account, there's a threshold limit of 200,000, meaning I can go to a bank or finance company and deposit to your account only a maximum amount of 200,000. You can deposit any amount, but if it is more than 200,000, then the finance company or the bank will ask various information, the particular information about me, who's going to deposit money, name, NIC number, address, permanent address, all that, and the source of money, where did I get the money, and why I am paying into your account, what is the nature of transaction, various know your customer information, and customer due diligence check is being conducted or required to be conducted by the finance company and the bank of such transactions to do with third parties. So the key areas of concern, occasional customers. All of a sudden, I may have not walked up to that particular bank or finance company before. So all of a sudden, I'm going and trying to deposit money to your account. So I'm an occasional customer. So they will wonder why I am doing it, and they will want more details. So it is up to them. Their responsibility is to ask, find out, research more information about me and my relationship with you, and why this transaction being carried out. Then identification of beneficial owners. The proceeds of these deposits is going to somebody's account, and who is the beneficial owner of this money as well as the account that is maintained. So when such inquiries are made, only more information will come out of money launderers and terrorist financiers. So it has been made very valid, very strictly adhered to. These directions are made compulsory or mandatory. Then next one, check against the blacklists and the watch lists. Those who have been proved doing money laundering and terrorist financing and various other socially unfriendly activities are blacklisted. So all the finance companies and the banks and other primary dealers and other intermediaries are given a list of such blacklisted persons and the entities. They should not engage any transaction with such lists. And these lists are available, or these blacklists are published by the United Nations, US, UK, EU, European Union, and various authorities and countries in the world, and in particular in Sri Lanka as well. In Sri Lanka, the blacklist and the watch list names are not published in a particular document, but what the central bank and the FIU, Financial Intelligence, say is that the suspicion names and the blacklisted names which they have announced to the banks and finance companies on a periodical basis, they must be collected and a list must be made individually by these institutions so that their systems can be looking for such names in the existing client base of these finance companies, banks, and primary dealers. At the same time, if by any chance, if any one of them approach them to open new accounts, then they should identify them. So you would have noticed in the near, but 2 weeks back, central bank published information after having levied financial penalties on a bank and two finance companies. Namely, since it is public information, I can discuss with you. Ceylon Bank. Ceylon Bank had not honored the suspension order on a particular customer and had transacted with that particular customer where the name was announced by the central bank as suspended, and they were fined 500,000 rupees. And there were two other finance companies. One is Ideal Finance, other one is the People's Leasing or something. So one was fined 1 million rupees, and other one was fined 500,000 rupees. And then a few months ago, there were 3 other penalties published as well. So central bank as the regulator has the powers to impose financial penalty as well as go through a high court and then jail the individuals responsible for negligence and not following the regulations that are being issued. So manage customer profiles, risk categories. That helps. There's a separate direction by the central bank, risk-based approach direction. Customers going by their profession, the businesses that they conduct, the employment categories, the past behavior to risk categorize them to low risk customers, medium risk customers, high risk customers, and extremely high risk customers. When you risk categorize them from the inception, it is easy for the banks and finance companies and primary dealers to manage the client base. The highest risk category, extremely high risk and high risk categories are maximum of 5 or 10% of the total customer base. So the balance are low risk customers and the medium risk customers. So therefore, those institutions, the staff involved need not worry much about the low risk customers and the medium risk customers, but have to really focus on high risk customers and the extremely high risk customers. So the management is also made easy. And the possibility of laundering money or the terrorist financing is always with this high risk category and the extremely high risk category. Then monitoring of transactions, mandatory thresholds of CTR is customer cash transaction reports. Other one is electronic fund transfer reports. So cash transaction reports are that every transaction conducted by deposit or withdrawal of cash, every transaction, cash transaction, if it is more than ₹1,000,000, every fortnight, 1st to 15th and 16th to 31st, the finance companies and banks and primary dealers must submit a report to the FIU called cash transaction report, indicating the name of customer, address, and the details and value of transaction and various other information about the transaction. There are formats provided and dedicated web-based link provided by the central bank to submit such reports to the FIU. The name of the web link is called LankaFin. And then again, electronic fund transfers like SLIPs, SEFT, SWIFT transactions. Again, if they are value more than ₹1,000,000, every fortnight a report should go to the FIU, 1st to 15th and 16th to 31st. Those reports again should carry the full information of the transaction and the customers involved. So they enable the central bank to collate such reports submitted by each bank, finance company, and primary dealer on these time schedules, 1st to 15th, 16th to 31st of each month. And they have the computer systems to amalgamate all the reports into one report. All the reports received from each bank, finance company, and primary dealer are amalgamated into one report. And they know that if a certain customer had gone through many banks, many finance companies, many primary dealers, going by the NIC number, identifying of the total transactions of each and every customer and the nature of activity. And after analyzing such information, then central bank sends out to the banks and primary dealers and the finance companies a suspicious list or watch lists asking more details of the particular customer's transaction who they suspect. So thereby there is a machinery to identify and isolate such wrongdoers or money launderers or terrorist financiers. And there's another report called Suspicious Transaction Report or STR, again to be submitted by the banks, primary dealers, and the finance companies to the FIU through the Lankafin web portal. If any of the transactions or any of the customers are suspected by them, they should not discuss with the particular customer of the suspicion, but the suspicion must be reported to the FIU with the details as quickly as possible. The direction says within 48 hours of the suspicion that was found out, within 48 hours, that report must go. So when these reports go to the FIU and the central bank, they do their investigations and pass on the suspected activity and the information to the relevant law enforcement agency, the CID, the Narcotic Bureau, Bribery Commission, Excise Department, Customs authorities, Customs Surveillance Department, and various other authorities to perform their investigation and apprehend and question such perpetrators. The beauty is that right throughout the investigation and until the person is arrested and apprehended and then punished, the report submission, the person or the name of the institution who submitted the report, suspicious report, will not be divulged, not be informed to any outside party, including the person who is suspected of the activity. So therefore, they are the banks and primary dealers and the finance company officials are free of any fear because of the confidentiality maintained. So therefore, all these measures have been implemented to identify the money launderers and terrorist financiers, to protect the financial system, the banking system, and the economy at large, to protect and weed out the wrongdoers by way of these key areas of concern being practiced regularly. In fact, Sri Lanka has a good record of doing these things to the perfection. If you remember, if you recall, the so-called civil war that existed until 2009, that perpetrators, the LTT and the other organizations, terrorist organizations, by effectively practicing these mechanisms or key areas of concerns, these, these mechanisms mentioned here, in the years of 2006, 7, 8, and 9, there were thousands of suspicious transaction reports submitted by the banks and finance companies and primary dealers to the FIU and central bank. And about 80% of them investigated and then fixed. Therefore, LTT and the terrorist organizations could not use the banking system in the latter years to finance their terrorist organization, terrorist activities. You might remember that this LTTE had underwater scooters, submarines, aeroplanes, and all that high value equipment to attack the security forces, and they were creating unrest, loss of peace in the country, and the economy downturn. So by correctly practicing these mechanisms, the banking and the finance company and the primary dealer network in this country were able to support the central bank and the law enforcement agencies to bring down to near zero the terrorist financing and the money laundering activities of this country. And that really helped the security forces to defeat the terrorist organizations and then bring about peace in this country. So these are the key areas of concern when you think of indulging in using any financial products and developing new financial products and enhancing the activities of the economy or the financial markets. These information and then how to use them, how to practice them, and why are they therefore the understanding is very important. Understand the source of funds, purpose of account, and expected activity. Documentation including know your customer profile and a Patriot Act certification. I explained the Patriot Act certification yesterday, where the US government brought in the Patriot Act in 2001, soon after Pentagon and World Trade Center attack. So that is to prevent the terrorism. Then perform risk assessment, enhance due diligence and the high risk categories to categorize the customers and the products and the processes into these four categories of extremely high risk, medium risk, and low risk. And then that is easy to manage. Less, your total volume is reduced by about 90% to the high risk and extremely high risk customer and products base. Risk-based approach to identify, assess, and mitigate and manage risks on customers, products, and processes and geographical areas. Because the geographical areas do matter, because any remittances going to Afghanistan can be linked to drug trafficking, or Mexico, or that part of the world where the drug trade is immense. Drug trade is rampant. You are put on inquiry. On the other hand, when a transaction is with Nigeria or any other country which are famous for fraudsters, they must be put on high alert and high focus. High risk categories, high risk countries. Now, Sri Lanka being downgraded on the risk rating, now it is C plus, or not CCC plus was sometime back. Nothing. Now it is very much lower. Now it is CAA something. Now the credit rating agencies also do take these incidents very seriously, and then risk rating is adjusted to reflect those. Then politically exposed persons, active politicians, public officials, and the connected persons. Suspicious name list. Why politically exposed persons are really matter here? Because their reputation of bribe taking and then undue influence to make their money, illegal money, bribe taking. Therefore, they must be, when they, a transaction involving them must be really monitored, and the actual source of funds and the intention of transaction has to be established. And if it is suspicious, STR can be raised to the Lanka Fin, to the FIU, and then you and your institution is saved from any repercussions because they are maintained confidentiality, and the investigations will happen through the law enforcement agencies. I can remember, I think BOC was imposed a heavy penalty, but something like 3 million rupees for not identifying a PEP, politically exposed person, in one of the transactions. Then the money service businesses like Western Union and MoneyGram, when these type of institutions collect money from the remitters and then process them to beneficiaries, when they do not perform the proper KYC test and the due diligence test, these particular institutions, Western Union and MoneyGram, like money service businesses, become very high risk because they are in the business of transferring money. And when they do not identify the money launderers and terrorist financiers, they become the great risk bearers. So therefore, banks and finance companies are usually on high alert with the transactions from this type of money service businesses. Casinos and gaming operators naturally are with the high instinct of money launderers and then terrorist financiers. Then military arms producing and then distributing companies. Most of the banks and finance companies and primary dealers do have a policy that they do not accommodate or they do not transact with the companies who produce arms and military equipment because they are made for destructive purposes. Then cash intensive businesses, like in the case of money service businesses, cash intensive businesses also can be vulnerable for use by money launderers and terrorist financiers. Others posing as import, export, travel, and consultancy businesses. Also, not so genuine people, but posing as importers, exporters, travel, and then consultancy businesses can be perpetrators of money laundering and then terrorist financing. Okay, we start with products now. Foreign currency and cash. As you all know, handling cash and foreign currency is a very risky business. There can be forged notes, there can be pilfered money, there can be proceeds of drug trades. So therefore, normally the financial intermediaries, banks, finance companies, and primary dealers should be extremely careful. And the other risk side is that when you handle cash and foreign currency in a big bulk way, they become your wealth or your asset, all right, but they do not generate interest income or investment income readily until and unless you deposit them into interest-bearing accounts. Interest-bearing accounts. And during this entire process, the cash and foreign currency notes can become easy prey for those thieves and people who pilfer. So there should be insurance cover, premium to be paid to insurance companies for loss of cash and foreign currency notes. There should be security guards employed. So there are heavy costs in real professional management of foreign currency and cash. Apart from that, there can be risks such as exchange rate risk. When you handle foreign currency notes, exchange rates can fluctuate. The rate that you bought the foreign currency notes plus a margin to cover all those heavy costs of insurance, security, and cash transporting costs. To cover all that, there should be adequate margin on top of the cash foreign currency purchase price. In addition, there is the possibility of structuring or smurfing by the people who sell you foreign currency notes. Structuring and pilfering, structuring and smurfing, meaning that, remember we discussed the cash transaction report and electronic fund transfer reports that are submitted over and above 1 million rupees to the FIU through Lankafin. These perpetrators, money launderers, and the terrorist financiers know this, that the regulator is going through the transactions over 1 million. So large money earned through illegal sources and then for purposes of terrorism, they split into small amounts. If it is 100 million, they might structure 110 transactions, 500,000, 800,000, 900,000, just to be below 1 million to avoid getting into the cash transaction report and the electronic fund transfer reports. So this is called structuring and smurfing. Although I use two words here, it is almost the same activity that we are talking of. Breaking into small amounts of large transactions to avoid being reported through the cash transaction reports and electronic fund transfer reports. So the compliance requirements are the cash transaction reports more than 1 million rupees every fortnight, and then net open position limit when in the case of foreign currency notes being bought and sold, that affects the net open position limits imposed by the central bank on the financial institution. And then also when the foreign currency notes are purchased, they can be sold to other institutions. And then finally, if there's an excess, they can be repatriated under secure consignment through aeroplanes to counterparties. So the counterparty limits are also required here. Counterparty limits being approved by the board to various counterparties to transact with currency notes, either local entities or foreign entities. In addition to the net open position limit imposed by the central bank and the board of directors, counterparty limits are also materially important. So the foreign currency and cash handling is risky. Therefore, the purchase price usually is with a big margin built into that to cover the overhead costs and the risks. With the increase of tourism, there can be high volumes of foreign currency notes that are being collected by the banking system. So there can be products that are evolving to share the risk and share the costs as well. So one has to sit down and think, and then discuss with the market practitioners how could some new products could evolve. Then bearer certificate deposits are bearer certificates. Because of the Financial Transfer Reporting Act number 6 of 2006, section 2, identification of each an account at every possible endorsement, because certificate deposits are bearer instruments like currency notes, which can be transferred by merely endorsement or without endorsement, mere delivery of the certificate. So therefore, in the year 2006, with the FTRA's section point 2, banks had to either start recording of each person who holds the CD that they issue during the lifespan of the CD until maturity, or the next best thing that they did was, although they printed the name certificate deposit on top of the certificate, the buyer of the certificate deposit name was recorded with full details with the bank, and to encash on maturity, again the same person has to come, because this certificate deposit was crossed with not negotiable and account payee only. It was crossed. It is like a fixed deposit receipt. But however, there are some business communities who love this term certificates of deposits, particularly the customs officers, probably, who earn mega bucks through various means of approving certain consignments and so on and so forth. And certain communities, business communities in the PETA area, they love certificate deposits instead of fixed deposits. But now CD and FD certificates have no difference at all technically, because banks and finance companies issue fixed deposits, and which is not transferable to anybody else. The buyer has to come back to the institution to take the proceeds of the deposit and the interest thereof. So similarly, CD although its name is printed as CD, it is the same thing after the year 2006. So there's no difference in that. Then KYC requirements for certificate deposits usually done, inquiring the source of funds and the beneficial ownership. So therefore, it is very similar to the fixed deposit, except the name. But as I said, there are business communities who love the name CD printed on the certificate because of their usage for so long. They want a CD, not a FD. In fact, for CDs, the rate of interest paid is very low. But still, for all, they would love to have a certificate of deposit. Then this particular instrument, traveler's checks, was heavily used sometime years ago, but in Sri Lanka nowadays not used. But there are some other countries in the world who use it. So, therefore, when there are some tourists coming from those countries, they might carry traveler checks, and bankers sometimes are called upon to encash the traveler checks and collect their cash because they earn a hefty commission by encashing the traveler checks. The traveler checks, when they are issued, also the usual KYC checks are done, and the traveler's passport is endorsed with the details of the traveler checks bought by him. And then the slip that is shown just below the traveler check is also filled and then given to him by the bank who issues the traveler check. Because in case of loss of traveler check, using the information in the slip, they can claim the money from the traveler checks company, Thomas Cook or American Express. Those are the companies who used to issue traveler checks in Sri Lanka. Then using traveler checks is high cost compared to credit cards and debit cards. And especially when the credit cards and debit cards emerged, the use of traveler checks was reduced drastically. And traveler checks physically handling like cash is another disadvantage to carry several check leaves, traveler check leaves in the briefcase or in the wallet or pocket or somewhere while traveling. Instead, carrying a small plastic card, debit card or credit card is easier. Issues of protection, security also a cause of concern. They are not in operation in Sri Lanka currently, but as I said, there can be certain tourists or certain travelers from certain countries which issue traveler checks. Banks may be called upon to transact or in cash. Credit card, debit cards. The features I did not explain much because you all know very much about credit cards and debit cards. But again, the KYC and the NS due diligence supposed to be done by the issuing banks of credit card, debit cards, and especially this time of the era where remittance of foreign exchange outside Sri Lanka is prohibited to a great extent by the central bank. Credit card users tend to obtain a higher limit approved by the bank who issue the card and travel overseas and then spend, violating exchange control regulations. So I know few of the banks whose customers use their credit card overseas and with very high volume money expenses had been called upon to investigate, and then with the KYC and due diligence information recorded with them, they ask for reasons and explanations of transactions carried or conducted by them in foreign countries using credit cards and debit cards. So therefore, the central bank has a greater control of foreign currency, foreign exchange expenditure by the through the international credit cards and debit cards in foreign countries by the Sri Lankans. The violators are really called upon to explain. Reported requirements to the Bank Supervision Department, the Exchange Control Department, and the Statistics Department for the number of expenses that particular individuals have carried out. Then the inward remittances using drafts and SWIFT, etc. As you all know, in the past, Sri Lanka used to receive about $7 billion per annum. That means about $600 million per month. Due to COVID pandemic, the volumes declined to some extent. But again, I think it is on the rise because we have nearly 2 million Sri Lankans working abroad, and then they tend to send their earnings to Sri Lanka, mainly through the banking system, through inward remittances using dedicated remittance systems by the banks who are issued, who are installed web-based remittance systems to their mainframe computers, and connections given to the foreign banks in the respective countries where Sri Lankans live, in the areas where Sri Lankans live. So as soon as they punch the information to the systems there, the monies are being, messages are appearing in the mainframe computer in the Sri Lankan bank head office, and with the details of the account numbers and the name, the beneficiary account are credited instantly. And for inward remittances these days, by courtesy of the central bank, additional 2 rupees for each dollar is given to the beneficiary when they encash into rupees, when they convert the foreign remittances to rupees. So the drafts are official checks issued by the banks. In this particular example, Bank of Cyprus Limited, they are more trustworthy than individual checks issued by individuals. The personal check issued by the Barclays check issued by one J.H. Conway, the reliability is much more on the draft or the official check issued by the bank. Bank may charge a fee to issue a check, official check, but the personal check can also be collected by the Sri Lankan bank and then sent for realization. However, when official check is issued, apart from the KYC of the beneficiary, KYC of the remitter, KYC of the issuing bank, all the checks, the issuing bank has to send a SWIFT message, SWIFT MT 110 to the bank who is going to encash, who is going to collect the proceeds of the check to the beneficiary, confirming that they issued the official check and the details of the check, because there had been several frauds happening involving bank drafts and personal checks. So therefore, as a practice, all the banks who issue drafts, bank drafts, favoring beneficiaries of in other countries, usually send SWIFT MT 110 confirming the details of the draft to the beneficiary bank. So before collecting such official checks or drafts, they verify the details in the SWIFT MT 110 received, and then only they process. Outer remittances the same way, because the Sri Lankan banks who send remittances out, they send through official drafts or can be sent through the personal checks by the customer himself, or banks can help them by sending a SWIFT message as a payment. We discussed about the SWIFT MT103, remember? So outer remittance from Sri Lanka is very limited except for education purposes and then healthcare purposes for patients who wish to obtain healthcare from foreign hospitals, and the amounts are insignificant other than the imports, other than the payments for imports. Money service businesses, MoneyGram and Western Union. As I said, enhanced know your customer and the due diligence is performed on money services business because they collect the money from one party and then transfer the money to a beneficiary, and they're supposed to maintain strict check on the KYC details of both parties. So their ability to perform the KYC matters. As far as I can remember, both MoneyGram and Western Union were penalized by the US FIU, Office of Foreign Asset Control, for certain leniency in checking the KYC properly. Then they are supposed to check out the source of funds and the use of funds as well. Use of funds by the beneficiary, for which MoneyGram and Western Union get connected with a particular local bank, and then they enter into a contract with the bank to pass on the proceeds of remittances processed by them to the beneficiary, and for that particular bank to do the verification checks on the use of funds and the beneficiary's KYC. Then the beneficial ownership of the funds check is also materially important, where the remitter particularly to ensure that the remitter has the true ownership for the fund. It can be bribed money, it can be ill-gotten money that he is remitting through this companies, MoneyGram and Western Union. So therefore, beneficial ownership check is very important in that aspect. So there are reporting requirements by the Bank Supervision Department, the Exchange Control Department, and the Statistics Department for this type of transactions by the Western Union and MoneyGram. There are several other money service business companies. The two most famous ones are the Western Union and MoneyGram. So Forex, spot and forward, and the respective other derivative instruments. We need to discuss little at length. Now that we have reached the time slot allocated to us, I think best that we keep the discussion on these products for tomorrow. So tomorrow we'll meet at 4 and we'll discuss till 6 these few products that I have listed. And then please remember tomorrow to keep a calculator in front of you, because I have some worked out examples, some few calculations to be performed on some financial products, because then only we will understand better the functioning of such financial products, especially derivatives. All right. Any questions on today's discussions or the discussion that we have had before? If there are any questions you can raise, we can discuss for a few minutes.
No questions, sir.
No questions. Thank you, Niluk. Thank you. So those who are not sent your research or assignment report, please send him today. You can submit it to Google Class, upload it to that, as well as send an email with a copy to Menaka at the Institute of Bankers, so that they can also record in the institute's portfolios or profiles. Then that will help me to go through the reports. And I think I can remember suggesting that the team members who compile the report take a few minutes and explain what they intended writing. We will choose a date. So prepare yourselves on a not very long, but you can take a few minutes. I'll tell you a date within the next week or week after, so that you can explain what you really intended and what you really wrote in the report. Okay. So if there are no questions by you all, I will wish you all good night for today until tomorrow 4 p.m.